Career Guides helps you break into high finance careers. Hit the first link in the video description below if you're interested in asset management, investment banking, sales and trading, and more. When you're a student, you have this tendency to look up at people in the world of finance and banking and kind of put them on a pedestal. You kind of look at them, or I used to do this. I used to think of people in the world of finance and banking, actual employees, analysts, associates, etc. I used to think, wow, these people must be killing it. These people must be rich. These people, like, wow, I wonder how it is to be like these people. Only until you enter the industry, you realize that, you know what, all of these people are just humans. They're just normal people who have gone to university, have done an internship or two, and have entered into the world of finance. And really and truly, no one is that special. They're just doing work. They're just doing work that pays well, and they're in an industry that a lot of people want to break into. Your expectations versus reality are going to be hugely different. If you're watching this and you're in university still, keep that in mind. All right, so when I entered the industry, when I started in the world of finance and investing 10 years ago, I thought, why aren't all of these people rich? Or are all of these people rich when I went to work? And I used to think that because they were obviously high earners. All of these people were in the top 1% of earners. And I used to be like going to meetings and thinking, you know, the 5 people around me on this table probably earn anywhere north of 80k to 200k to over £1 million, some of them. And so I thought, these people are rich, so why haven't they retired already? Why are they still here? Why are they doing this? I mention this because a lot of students and graduates want to go into finance and investing types of careers because they think it's an easy way to get rich. It's a get rich quick scheme or what have you. And the truth is, there's a lot more to it than what you see. So what I want to do in this video is kind of manage your expectations of people in the industry and pull you back from creating wildly exaggerated expectations of people in the industry, and therefore what you might expect of yourself in 2, 3, 4, 5 years. And so the first thing I want to talk about is actual pay versus earned pay. So if you're earning 100k in the UK, you take home about 65 or 67,000 pounds. The rest of it goes on taxes, national insurance, etc. If you are a managing director earning £1 million, let's say, it's a nice round number. From that, you take home about 550 grand, just over 500k. So you lose about half of it. And so as a student, if you hear, you know, these people are earning 80k salaries, 200k salaries, all of that, sounds good, but you're not in Dubai. Dubai, there's no tax. You're in the UK or in the US. Tax is a big thing. And so when you hear someone working 16-hour days to earn, you know, 100k plus a year, don't forget that that money is going to get pretty much halved. And so they're killing themselves working 80, 90, 100 hours a week to earn not 150k, it will be like 75k. Is it worth it? That's a question you need to ask yourself. Quick little interruption. It's not a sponsored ad. It's actually exciting news. So last week I launched careerguides.io. Now, Career Guides is basically a platform that offers in-depth, comprehensive career guides on investment banking, asset management, and sales and trading. The next one is going to be hedge funds or private equity, and there's going to be more and more. As well as this, I'm going to be doing a weekly newsletter, the first one coming out next week. It's basically going to be tips, deep dives, interviews, all things related to finance and banking careers that can help you get closer to the industry or in the industry. And so if you're interested in any of this, hit the first link in the video description below and check out Career Guides. If you click on that link and scroll to the bottom, you can get a free 24-page guide that's worth £30, and it's a guide on acing your technical high finance interviews. So the guide has 50 questions with model answers for technical interviews. If that's of interest, check it out. And with that, let's get back to the video. Next thing I want to mention is lifestyle inflation. So lifestyle inflation is real. It is a thing and it's very common. What do I mean by lifestyle inflation? Let's say we start off, we're earning 30k. Our lifestyles are going to revolve around a 30k earning, right? We're gonna live within that 30k budget. We might go above it, take out credit card debt and spend more than that. I don't encourage that. Our living costs are gonna, and our spending, investing, saving, all of that is gonna add up to about 30k, thereabouts. Now, let's say we get promoted, we get a nice bonus, and then a year later we're on 40 or 50k, or we move firms and we're on 50k. 9 times out of 10, for most people, your lifestyle is gonna inflate. You're gonna, you know, enjoy a few more luxuries, and so your lifestyle inflation is going to go up. You're going to be naturally over the year spending pretty much all of that 50k or thereabouts. And then if you move and you're earning 100k, or you get a promotion, you become an MD, what have you, As you earn more, you tend to spend more because you want to buy more luxuries, you want to buy a bigger house, you want to finance a nicer car, all of these things. And it's normal. There's nothing inherently wrong with it. It's just the way, everyone's different. And so it's important to be aware when you start out. Like when I started out, I used to look at people and think, you're earning so much money. How come you haven't kind of like saved a lot of it over 5 or 10 years and then just retired? But you realize the more you earn, the more you spend. And it goes back to those expenses like mortgage. A lot of people in the industry want to send their kids to private school. Private school each year is about 30 grand at the top private schools. It's like 10K a term, 3-4 terms, 40K. And that's not 40K that you pay. You actually have to earn more because that's after tax, right? So to pay, let's say you've got a kid for 1 year of private school, that's 30 grand. The person needs to earn about 40 grand, pay taxes, and then they've got 30 grand. Then they pay that, right? To pay, that's each year of private school. And then the kid's going to be in school for what, 5-10 years? So that you need to be earning a lot. And so if you are in banking, for example, and you're earning lots and then you're paying for a fat mortgage that costs God knows how much a month, and then you're paying private school tuition fees for a kid or 2 kids, and then you've got a nanny, nursery, all these things, they add up. And so it means as you earn, these were luxuries that they weren't experiencing when they were an analyst or an associate, right? And so they were living within those budgets, those salaries. And then as you climb, you earn more, you spend more, you get more expenses. And so that's why the middle and upper class are actually not extremely wealthy, because all the money that they earn comes in one way and it kind of goes out another. And when you are not in the middle class or the upper middle class, when you're working class, you don't earn as much money as them. But on the flip side, you don't have as many luxurious expenses as them, such as a huge mortgage, such as, a privilege of sending your kids to private school and dealing with those fees. So there's pros and cons to both sides. These are things that I didn't really think about when I was a student, because I entered the work, I was like, and I was staying at home. So I was loaded with cash. I was earning a salary. I was saving like 70% of it because my expenses were low because I was staying at home, right? But as you get older, you realize, and when you move out, you buy your own place, expenses, they crop up and they add up, and lifestyle inflation is a thing. So if there's one thing you take away from this, try and minimize lifestyle inflation. Get to a point where you're happy, where you have a comfortable earning or comfortable living, and then keep that constant, and then let your earnings keep going up. At the beginning, it's going to go up naturally. Earnings go up, lifestyle inflation is going to go up, but don't let it go up forever. Maybe until you're 25 or 30, hold it there, and then try and keep your salary going up. And then the gap will grow bigger. This gap is going to be your income that you have that's not being spent, so you can invest it or save it. And I think that's the right way to go about kind of getting to financial freedom early, or retiring early, as opposed to working until you're 65, 70, if that's what you want to do. Third thing I want to touch on is keeping up appearances. When you are entering, or when you work in the world of high finance, asset management, investment banking, sales and trading, private equity, venture capital, hedge funds, etc., there's kind of this keeping up appearances thing. So, when you look around, a lot of people have Rolexes. An entry-level Rolex costs about 7 grand, 5 to 10 grand, right? Now, in real terms, like you need to buy a Rolex for 7 grand, you need to earn probably like 12, 13 grand, pay your taxes, and then you buy the Rolex. That's not cheap. That's a lot of money. I'm happy with a basic watch. I don't need a Rolex or anything like that. But a lot of people in the industry want to keep up appearances. It might not be Rolexes. It might be probably not a Birkin bag, but designer bags, handbags. It might be fancy designer suits and all of these things. And they don't come cheap. And so if you're focused too much on keeping up appearances and looking like, you are trying to fit in, it's going to cost you a lot of money. And before you know it, if your monthly expenses are a few £1,000s on clothes and designer brands and stuff like that, it will rack up by the end of the year. So that's another thing. Now, one interesting story, there was a managing director, and there's a lot of people who pay like 5 grand, 10 grand, 12 grand on rent. Now rent, this isn't a mortgage, rent each month. And so it sounds like a lot. But relatively speaking, they're probably on 500 to £1 million, right? And so 12 grand a month on rent isn't much. It's probably the same as what you pay as a percentage of your annual earnings, right? And so I used to answer or ask myself the question, why don't they just, they're spending 12 grand a month on rent. That's 144k a year. Why don't they just, save up, put down a huge deposit and buy a place? And the truth is, there's a lot of short-termism in the industry, not just in the industry, in life in general. Now, what do I mean by this? Short-termism, it's like, all right, let's say if you're on a 500k salary, that is probably like 325k after tax. And then you divide that by 12, that's 27 grand thereabouts each month. So 27 grand each month you're getting, right? If you're on a 500k salary. Now, of that 27k, let's say 12k goes on your rent because you're living in a big ass mansion or, you know, fancy house in Mayfair or Hyde Park. So 12k. And then you've got, you know, 15k left. That 15k is going to go on some investments, some savings, and then your living costs for that month. And so you do that, and then you keep doing that. And so the person earning 500k a year, who's earning 27k a month, will be like, in order for me to buy a house, I need a deposit of probably 100, 200k. I don't have 100, 200k. And so they're so used to paying the rent and spending that monthly paycheck of 27 grand and putting some of it into investments and a small amount into savings, that each month it comes in, all of that money gets split accordingly, and they have not enough money to save a meaningful amount. Whereas if I was, for example, if I was earning 27 grand a month, I would spend 7 on everything, whether it's rent, food, cost, whatever. That's a lot. 7k a month to spend on random stuff. Cool. And then I would save 20k. Now that 20k, I'd save that over 10 months, that's 200k. I have the deposit. I'm just using a rough example, right? So over 10 months, I've saved 200k. That's enough to put a deposit on a, you know, beautiful house and, you know, get a mortgage, right? But some people struggle to do that because they don't have the long-term foresight of saving that sum of money over 10, 12 months. They would rather just pay rent and live month to month. Also, there's the debate, is it better to rent or is it better to mortgage? That's a whole different video. That's a whole different argument. Pros and cons to both. There's no right or wrong answer. It depends on your own preference. You might want to move about. So that in that case, renting is better. You might want to settle down. Mortgage, buying a house might be better. So you're not at the mercy of your landlord. I'm just freestyling, but I think this is useful stuff to know because it's stuff I wish I knew earlier. I was a bit ignorant to all of this. But as you get older, you learn these things. And hopefully that's what this channel does. Informs the younger me on things that the older me is learning. And yeah, I don't want to go on too much. That's pretty much it. Hopefully you found this video interesting. If you have any comments or questions, let me know in the comments down below. Check out careerguides.io, first link in the video description below, and I'll see you in the next one. Peace.